Where to your mind are the big pools of profit right now?
That's the dilemma in my mind. What is the profit pool of which period? Because earlier the advantage I had is I could look out 1-2 years ahead of the market and pay for that 2 years forward profit. For example, let's say in the telecom wars, when it will consolidate, people will pay for Bharti 2 years later, as an example. But in the world which we are now living in, if an Amazon can make a loss for 10 years in a row, if a Paytm can make a loss for 10 years in a row, and the market still value it, or Flipkart is continuing to make losses for kind of years on end, and the market values it, what is the profit pool of which year where the market is focused is a landing point I am unable to reconcile right now. If a lot of these things happen, the profit pools of explosion on consumer, healthcare, IT, financialization, platform plays, privatization beneficiaries, people who are taking over assets which the government would have done. So there is a lot of money to be made over here, no doubt about it.
I think PSUs as a group of companies have been misunderstood across the board. That's what I feel. And PSUs have not been perpetual underperformers in the stock market. And the underperformance was very stark in the last couple of years. And that is not backed by financial performance of these companies. Look at last 5 years, the profit growth of PSUs was actually more than the broader markets. I believe this underperformance was possibly a result of the ETFs, which the government has hinted that they are unlikely to adopt ETFs as a divestment tool. The focus is now shifting to the strategic sales. So I think the real value of these companies will come out, and that overhang of ETFs is no more there. To that extent, I think from a stock market perspective, the environment has turned positive.
But I think the real genuine problem area for the markets are in the banks and the financials. And the tape is again telling the story that all these stocks have flatlined for roughly a year. And in a lot of ways, it's similar to the NASDAQ. And I must, at this point mention the very important thing that if you look at the high-flying stocks of the years prior to 2020, which were Facebook and Amazon and, Microsoft, etc., for the last something like 8-9 months, they have done zero. Absolutely. Apple was $120-$125 in August, September last year. It's exactly the same. Almost like HDFC Bank, which is at $1,400-$1,450 for the last, I think, roughly 7-8 months time. After the first flush of the rally, which happened in March, April, May, it has just flatlined. So have the other banks. So I think banks and financials are where one needs to be cautious. I think the biggest risk in the market exists there rather than in the mid and small cap space. So, and that's like 40% of the index still. So if they come down by 20% or 10% or 15%, you are automatically looking at a 5, 7, 8% cut in the Nifty.